Hello, everybody, and welcome to the Plus Three Futures and Commodities Show. We are recording here on Friday, May 23rd, a little after 5 o'clock Eastern Time. My name's Ben Maldonado. As always, I'm here with my partner, Barry Hederachi. Barry, how we doing?
Doing great, doing great.
That's good. On today's show, last week we were talking about, hey, we're in this window and something's going to happen. Well, something happened, and now we're
Mhm.
coming into the Memorial Day holiday weekend here in the United States. But we don't think it's going to be boring next week, and we don't think it's a good time to go on holiday. As a matter of fact, the next few weeks should be quite action-packed in the markets, and we will go over the reasons why with you on today's show. Barry's got the front month contract there, the June contract up with the beautiful circle. Why don't we take a look at start at the markets by starting with the front month contract there and the beautiful circle you had
hmm
for
hmm
months prepared.
Yeah, all ready to go. So last week we talked about a lot of things, but one of the things I brought up was this 59.90 and the circle intersecting and saying that could be an important point, and not something that you see every day, but it's good to track them as they're developing. Not necessarily the horizontal line, but the circle, right? The whole thing's about the
Mm-hmm.
circle.
Mm-hmm.
And sure enough, we tapped it, and then we were down from there on. It was straight down. And we'll get into the S&P a lot more. We look at the weekly. There's some really important things there to look at. And we're basically left with, I want to make it really simple so we don't get, there's a lot of price action, a lot of things happening. So I want to just keep it down to I guess the practical. So going into next week, 58.74 is the level we want to watch. If we can settle above it or not. If you're able to settle above, well, we'll have to deal with it, and we'll have the levels to look at. Obviously, we could go up again, up against a circle, and then drop again. So that's another option. But anyway, 58, 72, 74 areas area to watch for resistance. And you can kind of see that that level is good to go because the first drop we held it there. The next day we were screwing around and really couldn't even make any headway above it. And then today all the price action was below that. So the level's good. And on the daily chart, that's a 50% of the level coming off the high. The next support level is really 57.95. And really don't have anything in between on the daily. So that's what we have to go with. And if we take that out, then 56.05. So we haven't changed anything. If you guys are watching the show, these numbers have worked out really well. And this bracket between the oh 05 and 95 worked out because that's where the consolidation was. And then the break right up into the target. And now we're breaking down below 58.74. Last week we talked about the fact that, if we can hold above it, fine, let it correct and see what happens next. But what happens when 50% levels get taken out? Like here, the first time around coming off the high, 50% held, it rallied, almost took it out. This is where everybody was all very bullish. And then what happened? Um, Again, this level, once we left it, that was it. And even the rebound couldn't quite get to it. So the level's important. So we'll continue to watch it. And 57.95 being the important level for next week. And this is a continuation chart. Just a little bit about the timing that we had coming in. We had 3/4 in timing, and we had a 144 going up into the high. We had a 90 that we kept harping about for the last couple of weeks, which thank God it came in. And we also had the 45 low to high. So the timing was there. Now we're kind of watching trading the leg. Now the downside here, the 50% of the square ends up becoming 56.94. Okay, so we want to watch that. And might as well just copy the other number because they're right there next to each other. So that's how that looks, 58, 56.94. 57.95 here on the daily. What else can I add to this? Not much. It's really kind of a retrospect because this is how we got started on this leg. So I just wanted to give you guys a good reference before we go on. Here's the Dow futures. I think last time we talked about the Dow, I think it was last week, we talked about this 42,600. And, if we're really going to challenge the highs, we really have to get on top of that and stay on top, which we really couldn't pull off. So we had a timing line come in. We also had timing over here. And that high to high is 72 days. That came in on top of the other timing, the other things that we had going. And we couldn't hold 42,600. So we broke down, and then where did it come? Came right down to that 41,000, that odd number, 41,348. Just might as well round it off and call it 50. And we kind of stalled there. You can see why that's important. We have structural support here. This is part of the reason why we thought today we might get a little bounce off that, not just unless we take the lows out, right? It should have provided good support, and it looks like it did for the time being. So that's that. For next week, again, we have to drop back down to 46,600, especially working with the daily chart. You can see we can get there in 2 days, 3 days. We covered that range in 2 days. So it's not it seems like a lot, but it's not. So we want to see if we can get up above that. Till we do that, if you look at the overall momentum, is really sort of to the downside, right? So just keep that in mind. We might need to reference that later. I'll jump to the weeklies in a second. I just want to cover these daily charts. This is another continuation chart. And on this is coming off the lows in October of 22. And the 270-degree level is right here, and right below 57.51. Let's say call it 57.50. So 57.42, 57.40 becomes a number. So like 10 points above the 270-degree level is the 57.51. And so that's another point of support. Another reason why I posted about the support this morning, thinking that should be in place. So for next week, we definitely have to watch this, because if we slip below that somehow and we can't really get above. Remember, we had this entire range marked off, back in February, March. We were watching that, and finally, we were looking for it to either turn here or break above. We broke above, had a good run. So we come back to the same sort of scenario, right? If we get under 57.51, we have to watch to see if we stall. If we stall, then we have more downside price action to look forward to. So keep an eye on that. That's really the number I wanted to show. Not much more than that. Now let's look at a daily cash chart. Well, it's another reason to talk about the support level, right? We're 1, 2, 3/8 down. That's a pretty decent correction. We're at the 3/8 line, I should say. And right on top of the zone that we had marked off back in March, we were looking for resistance, and you can see how that counter trend pretty much failed in the zone. And that's when we started the bigger movement down. So we're at a critical level. I would say 3/8 is sure that's strong enough. Or we can look at it also like 5/8 from the 3/8, 5/8 is a critical area. So you can say 5/8 from you're going to look into the square counting from the bottom. Anyway, the important thing here is support level. So if we started rolling down, then 57.97 becomes a support level. So keep that in mind. That's if we lose. Obviously, if we lose the 5/8, we're going to get down to the 50% level. So that's a really important level to watch. And you can see how price has been respecting that. So we want to watch this 56.97 for support. Yeah, that's a good way to look at it. Let's jump to the weeklies. Here's the ES continuation chart. We are 270 weeks from the low in 2020. That's kind of an important thing to watch. And we had this 59.81 level as a resistance or support, I suppose. Can't remember how I got that, but looks like an eighth. Yeah, looks like a quarter of a square line. But anyway, we had that and 270 weeks low to high, not the high, but low to high. Not that that's a big deal, but why ignore it? Because we had 90 here, and you see what happened, right? Yeah, it took a couple of weeks, plus or minus, but then right down to the 135. You can see that worked,
Hmm.
and back in the 225 weeks, gave us a little bit of a drop, and the 50% of that next square, gave us a move down. So why not this, right? It's so it's important one to watch. A lot of things happening. A lot of things are sort of what's the word? You can say almost say a lot of things are coiling up. So we want to keep an eye on these things. Let's look at another weekly chart. So this one is it's a real weekly chart, meaning it's a weekly bars with the 52-week square on it, and it's been fairly active. This is also from the 2020 low, and you can see the we tapped the 50% of that square last week and this week and reversed. And you can see what kind of reversal that is. So we really want to watch. So then, we say, what happens here? Well, obviously this is resistance. And at this point, this 57, 53 becomes the key level to watch. Mainly, maybe not for support, while it could be that. Obviously, this bar right before the whole tariff thing came down was really stalled there. So there is structural support here, just like some of the other structural support that we saw in the other charts. The reason we want to watch it is if it breaks, the whole thing could just sort of, somewhat like the plug, we could really start to have an effect. And the level
Let's look at
after, uh-huh,
that. Looks like an outside reversal bar,
exactly.
which
So
is significant.
on a weekly, yes, I think we definitely want to take note of that.
It's coming in the major timing week we had, makes it even more significant.
Yes. And you can see last time we had one was right here in that zone. You can see right there, July 21st. And we had a couple of weeks down, like a good couple of weeks down after that, which topped right at that 50% level here. Anyway, these are the things to watch. I think it's important to take all this to account because we have a lot of moving parts here. And this is the weekly we look at, I don't know, every other week, maybe every week. If you guys are watching the show, then you've seen this before. So 59.50 was on the board. You can see how we came up and tapped it a couple times, really couldn't do it. So to me, that's real failure, especially if you boot it up with an outside reversal. From just a chart perspective, we had a solid high move down, and this would be the first counter trend. So we talked about watching and waiting for the first weekly counter trend. And so this is it. And the reason I say this is important is, normally you wouldn't start even calling it an end of a counter trend until at least you get a reversal of some sort. So here we have an outside bar reversal. So that's something to note, which means we can kind of say, well, that was the weekly counter trend. What you think, Ben? That's a fair way to look at it. I think it's practical to
And it's
keep it.
significant, very significant.
Yeah. Yep. And yeah. So that's the story with the weekly numbers are lining up. And yeah, yep, that's what I have. Let's take a quick look at the 30-minute like we always do. So the 30-minute chart was really helpful last week. Monday low came in. We ran up to test the highs. I think I had another square at the time, but anyway, the resistance was right above the high on Monday. And watching 59.53, you can see how we crawled along there, came to the 50% line. And that's really where the real deal was really at this 29, 59, 27. Because if we held that, then we can say we can take another shot at testing the highs. We didn't. We tried, right? But we failed at the 59.53, dead on it, and dropped to 58.37, the next support level. And we crawled around here, right there. You can see on the 22nd, we really kind of pushed it, false break, and tried to rally again. Really kind of failed on the way. This is a real failure because we really couldn't even get up to this 59.09 level, and came back to the 58.37. it's going to hold, this is really it. Maybe another little false break and then go up. Otherwise, we're 57.47 is pretty much the direction. So we went lower, didn't quite get to 57.47. There was because for one thing, we had a lot of structural support. You guys saw the other support numbers around 57.50 line up. And of course, we had a rally up into the 58.37, which is now resistance. And that's kind of where we stalled and rolled over. So that's the 30-minute. So going on to next week, it's easy to see what the number is. 58.37 is the one you want to watch. And if we can get above that early on, I think we can expect some kind of a move to the upside to test 59.27, these areas. And if we somehow stall here or at 58.64, meaning, trying to do like an ABCD up, not to equal the leg, but just to move and either fail here or this zone, I should say here. If we fail in that zone, I think then we can expect lower prices for sure, because we're probably going to go up and test this area, this 47 to 28 area, right? That's what's left. If we can somehow get stuck in here and sort of grind above 58.64, then we have another theme. And if you guys watch if you watch us not watch us, if you guys follow us on X, we post every morning and Ben posts all through the day. What's happening with different markets, NASDAQ, S&P, all of that. So if you are already following, then we put an update every morning. So I think that makes it easier. And speaking of which, probably, we talked about, you think we should look at the fuse lines right now? I can do it in 5 minutes.
Let's do it at the end.
And okay, all right, let's do that. Let's move on to bonds. Now, this low, I've been talking about how this low has to be tested forever, not forever, well, since the low came in. And well, sure enough, we went and did a false break yesterday, 120 degrees, roughly low to low. And this happens to be the 50% of the square coming off the high. So let's watch to see if we're going to mount some kind of a rally off of this, or if it's just another counter trend day on the way lower. So I think the key level to watch here is 110.26. And that's really it. I think the setup is fairly simple. If we take this out, we're definitely going lower, and then all this becomes overhead. That's resistance, and we can definitely drift lower. Drift lower also to back check the low in October of 23. So that's around, where is that? The 107.04, right around there. So we could drift down there at least.
Yeah,
and then
it sure looks like it's going to want to go down and test that, huh?
it does. And if we're going to get that far, might as well just go a little more and just finish the 90 off.
Hit the 90, right? Exactly.
So all that is lined up, and you can see how weak these counter trends are. It's just one bar and boom, one bar, boom, one bar. So when market starts doing that on the way down, it's very weak. So that's just something to remember. Let's take a look at the weekly bonds. So last week we talked about this 114 being important, mainly because we really couldn't get above it the week before, right? Or that last week. And to watch it, that we're heading towards potentially testing the low we just talked about. And that's 704. But I have a level at 106.27 I had marked off. And we have an ABCD, and we have 5/8 down here. So a lot of support in that area around 106. Let's say 106 and a half, plus or minus half a point. And we have ABCD completing there. So I think that would be just a beautiful setup. We can get down there, deal with the resistance. Deal with the support, test the support, finish off the ABCD. Perfect. So if that happens, otherwise,
it'd be a nice setup, wouldn't it?
Oh, it'd be a great setup. And it'll give us some kind of a finish to the leg for now. And in the meantime, 114 is resistance, so you can trade it that way. Let's take a quick look at crude. Well, it's behaving the way we were kind of expecting. We were looking for a flush, got the flush, resistance held, came back higher low. Now we're back at the resistance zone. We spent a lot of time really in that in the zone that we marked off earlier. Um, all right, so let's just give it time. I mean, that's been sort of the theme. We've talked about how it just needs time, and we have to nothing much to do till we can get above it, right? So
It's coiling. It's coiling again.
yeah, it's coiling, and let's give it the time. I'll drop this trend line here, and but then possibly we could have a triangle, and then obviously the breakout could be the one to watch. I mean, this breakout pullback would be amazing if it sets up like that with the pullback. Otherwise, we might not get a pullback. So because we don't, crude moves in strange ways, so we sometimes on very short notice. So we want to get set up the long side, but we also want to make sure that it's time. And we talked about it last week. So we'll continue to watch that. So far, it looks good. And for the weekly, it's a weekly we look at watch every week. You can see the resistance still there, and we're waiting for it to sort of finish up. I mean, like I said last week and the week before, if we're going to go lower, it's better to do it now and get it over with, get it all completely flushed out. So that's another possibility. And either way, we're really interested in the flip side, right? We want to deal with above 61, above 64 area. And you can see how beautifully, if you guys remember this chart we did months ago, well, it was last year, really. We were waiting for this circle to click in. And so, yeah, we've had it since last year. So 64.60, you can see how, a year later, how it's still sort of playing a role. And that resistance it's going to stay in place, not going anywhere. And that's why the move out of here is the thing to watch. Is it going to do sometimes like in the S&P where, news pops it above? That's the way you break out of that sort of the gravity of being down here, or is it some kind of a grind to chew through that? So we'll have to watch it, but you can see how, I just want to show you how important that level was. This, and another reason for support, we're talking today, it looks like the 50% day. We're talking about a lot of 50%. So 57.90 is the 50%. Well, it's 90 degrees down. That's what it is from the high. And I'm using a square of 60. Easier to see these things. Let me show you guys what that is. It'll probably make a better impression, eh? You can see how that's really the 90 down from the 2008 high. And it's important level. Why is that important level? Because the low in 2020 it was 135 from that high. So, all these, all the squares work out just fine. We just have to give it the time. And here, the fact that it's sitting on top of the, I should say 50% of the square since we're on the 60, but really it's the 90 from the 08 high, right? So we want to really watch this. It looks good. That could be a good place to install this out. But, knowing crude, might be better would be to come down and do a false break, flush it a little bit, and then run up. So we'll see if that happens. That's it for crude. Anything you want to add, Ben?
Just
Daily
what
or
you
the weekly?
said. We
Mm-hmm.
just, keep monitoring it, watch those levels and see if we either get the flush and we keep going down or we actually, just go up and break out. Either way, you got to look to
Mm-hmm. Yeah, but
see
it's
if it
getting there.
sets up. Yeah.
Yeah,
Yep.
it's working itself into that. So, all right, let's move on to gold. Gold, we talked about how gold found resistance at the 450-degree level, 34.30. We're looking for it to do some kind of a correction, counter trend, consolidation, and above the 50% would have been great. Would mean it was very bullish. But given the run, I think coming down to a coming down even a full square. Actually, it's full square if you take it from the high.
Right.
That's so we did correct.
And we did an ABCD and we got a nice reaction off of it.
ABCD plus full square.
Hmm.
I think it's good. Now we're back on to test the 34.30 area. Again, like I said, if we get any kind of a pullback and it holds about 32.53, well, it's that much the better, for gold. So bullish, yes. Are we waiting for it to finish the consolidation in the big picture? Also, yes. How bullish? Well, I think long as we're above 3070, which is 360 degrees up from the 22 low, gold's in a good place and probably only trade the long side. All right, let's take a look at the weekly. I was thinking today, man, we've been bullish on metals forever. I don't think there was ever a time when we were like, okay, we had to sell this for a while. It's
No,
always it's always been, well, it's correcting. Let's just wait for support, you know.
right?
I was gonna say, well, you guys should go back and check. Practically, you can pick any week in the past 3, 4, 5 years, and I'm sure we're bullish about it. So
Yeah, overall, because we
yeah,
know what
yeah.
the big cycles support, and gold and silver and copper are all in that
In that
realm.
basket. Yep, yep. Anyway, so here's the weekly. Again, we had good timing weekly, and we had price and time right up here on a square of 52 on a weekly, so it's a real weekly chart. And we managed to get above the 208-degree level, so that would be 32.94. And if we can settle above it, I think it's very strong. There's really nothing much else to say. And if we can somehow settle above this, then we're heading up into 3700 area. 3710 is the next level. Obviously, we have a little bit of work to do. 3500 is in the way, basis the weekly. So we'll see how that goes. But for now, the correction was pretty healthy. Now it's making its way back up to test the highs. Let's move on to silver really quick. And silver, I think I spent a little bit more than a minute last time talking about how long it is above the 50% level. Silver is in a strong position. And once we get above 33.63, which has been the resistance for this cycle, we can start grinding a little higher and how the price action looks. And I talked about this trend line, long as we can hold above that, I think we're in pretty good shape. And this break and this trend line is still okay. Mike, who follows us on X, was asking us to do a little show on how to use Gann angles and angles in general. And Gann angles are really, they're sort of moving averages. So just like that, you can have a break and you can account for that. If you can account for that, then you can continue to use the same line. Works just fine. It's not like, if it hits once, gone, That's why last week I said that as long as his line holds, it's very, very bullish pattern. All right, that's silver. Let's move on to copper. Copper, pretty
Yeah,
much the same.
had a
Yeah, go
good
ahead.
week, huh?
Had a hell of a week, and couldn't happen to a nicer guy, So,
It
and we've
it
been,
broke
yeah,
that triangle you were talking about last week
yeah,
and just
yeah,
rocketed out.
just broke the triangle, and triangles forming like this above key levels. I mean, in this case, we'd say the key level would be the 50% level. And this happens all the time, you guys. If you guys follow us on X, you see most all the triangles that happen. Not every one of them, but we often refer to them because they're great ways to catch the move. The question is, how do you know which direction to catch the triangle? And this is a good example of that. You can, if it's basically happening, majority of it's happening above a key level, then break to the upside is probably what's going to happen. And here we have an potential ABCD setting up, which
Hmm.
copper likes to do. And if that happens, let me add that in. Well, wall to wall, there you go.
Hmm.
So that would take us right up to 55.33. Next 50, man, that would be beautiful if that happens, right? Well, when that
Set up a
happens.
false break high, right?
Yeah, I mean, this would be fabulous. So let's see. So something's cooking here. Or, it doesn't always have to be that because we need to really prove ourselves before getting up there. So 495 is the resistance for now because when you said false break, that's what I thought of. We could easily do a false break here and trap everybody, right? And come back and correct again. But either way, we're bullish. And why? Well, because the support's holding and it looks good. This cycle high came in. We talked about it at the time, and the correction was good. Everything's fairly healthy and normal, I think is the way I would put it. So what does that mean? Well, that means we follow the chart for the rest of the way. All right, copper weekly chart. And I think I was bullish last week too. And I'm just saying this, like, we're talking about probably getting above the 480 level. We got above it. And, weekly needs a little bit of play to really clear that. But once we clear that, we're pretty open up to 216-degree level. And that's up in 536. There's some room to go if we can hold above that. So let's see. But basically, you guys can see how the movement has been sort of I would say beginning of parabolic, not quite parabolic like we normally use it, but it's there. It's basically to say it's upwards. All right, let's move on to the dollar. Last week I think it was in the weekly chart that we saw the highs come and hit some resistance. We were looking for some kind of a pullback, but here, it would have been great if we came up to 60 and tested it. But we were making higher lows, moving up, looking pretty good because the low came in fairly well. The 102, let's say 60 would be the level. If we were testing the full square, we could have gone up there, but we didn't. We rolled over a little bit earlier, and then we got under. We can see how we were sitting on top of the 100.5 level. And I think I mentioned it last time. As long as we can hold above that on any pullback, we would have been very strong, right? Very strong to go up and challenge that. And we didn't. So, now we 99.50, go back to 98.88. That's really the number, 98.80. Let's say 98.80 is where we should come down to. And let's see if it holds. I think the low is fairly good. So low should hold. This might be some kind of a, I don't know, false move. Not a false move. It seems like a normal correction, but the way currencies sometimes correct, they're not always textbook clean. So let's see, because the low came in, so I'm expecting this to be definitely hold higher than the low in April. So that's the test here. We can hold about 98.80. We're in really good shape. If we slip below, well, that's probably a little bit more sideways action. If we take it out, well, then God help us, because we'll have to wait a little while, because 97 is the next level, then 120. So the dollar could really start tanking here. This level is really critical. It's really critical that we hold the low in April for a lot of reasons, but I'm just saying. And because of that, I'm hoping, and plus we're bullish the dollar, so I'm hoping it'll hold above that. And 98.80 would be a good spot. Does that sound convincing enough about me being bullish to the dollar?
It definitely sounds good, and that half square there is the key, right? If you'd hold it, make a higher low, then you could be off the races up to the upside.
Yes. And this is the weekly chart, 50% of the square that we found resistant last week and the week before. So we were expecting some kind of a consolidation or correction. I didn't think it would be this deep, but well, here we are, So let's see what happens. Looks like we have a little bit more room to correct and whatnot. We can give it the room it needs. All right, let's move on to the euro. I mean, it looks like having a nice counter trend. Let's see what happens. And so far it looks all very normal, because we found support at the 90-degree level right there. Got a little bit of a correction. We got on top of the quarter square, so it looks a little stronger. We'll see how far it goes. 3.8 seems like a fair level to sort of find some resistance. It'll be around 13.98. Yeah, that's pretty much what I have to say about the euro. Let's look at both weekly charts. Well, dollar we looked at. Here's the euro. So last week we came down to test this 109.5 level that's been on the board forever, and we reversed. And I think me mentioning that if we get stuck below the 90, obviously that's the easy route. And otherwise, well, we're going to test probably higher, as long as we can make a lower high below the high last month. We're in pretty good shape
That
for the
90
short
is the
side.
key.
I think the 90 is going to play a key role. And who knows, eventually this might end up showing that this was a false break against these highs, we turn back, because move down was fairly strong. Uh, so now, we're waiting to see move back below the 90, which is 1307, 1310, 1311. So 1311 is the number. So let's see what happens there. For now, I'm treating it as the highs in place. We're watching the counter trend and we looked at the daily, and that's kind of where we're expecting it to sort of stall out. Obviously, if the highs get taken out, then, we've got a lot more to go, like here. I just cannot even imagine that. But hey, I've been wrong before, so we'll see what happens. But that's a take on the euro. And let me put it back to you. I think that covers everything. Anything you want to add on the currencies at all, or
No, just that watch those key levels because there's a lot of volatility and a lot of games going on in the currency markets, related to bonds and carry trades and all that. So there is going to be a lot of games being played in those markets.
this is true. There's a lot going on. And here's the 3/8 level that we told you about for resistance, and that is 1395. I rounded off.
Are you gonna look at the Hang Seng?
Yeah, how can I forget that? Let me do that. Thanks for reminding me.
It's been
Uh,
so harmonic.
yeah, Hampton's been really good. I don't know if you're going to cover natural gas, but that low held, and we made a
It
higher
did.
low,
Yep.
and probably the contract change didn't hurt. So now we're back, back. So this level seems like, I mean, we've tested it forever, right? All through
Yeah,
here,
the
November,
298 is
December.
so key.
So we'll see if we hold. I mean, now how we take it layer by layer, right? You can see how the
Hmm.
square held. I mean, the support held at the 50%, came to the quarter. Somehow, this is sort of grinding above it, broke right there. And then now we've been on top ever since. So if we can get above the full square around 130, what is it, 140? Let's say
442. Yeah.
442, then we're in good shape again. And that's a 90 coming from the high back in 22. So it's kind of a significant high.
Hmm.
We'll watch it. It's all right. Again, it's a little bit like crude, like a lot of the energy stuff. We're watching it to catch the big move, which, when you watch it every day, you'll see it developing. So we'll get on that as it
Chaos
happens.
comes after dullness, right? We're in the dullness phase with
Right.
those two.
Absolutely. All these long-term bottoms and everything.
Hmm.
And 144 degrees up from the 22 low in the Hang Seng. It's right around 28, 23. I want to say 900 and just round it off easier. Let's say 23,900. So we're right there. We were tapping that 144 degrees up. And I also have 24,086 as a level. And we had a good run. I mean, that's a full 72-degree run. So I'm thinking we get some kind of a correction. And, and long as that correction holds above this 22,710 area, market's still positive in the long term. Which what happened. That's interesting how the Hang Seng kind of hit a hard spot, and so did the S&P this week, right? Uh,
Yep. It's
so that's
very, very telling.
so if we start to correct here, obviously, um, not is always in lockstep, but we S&P they both might be doing the same thing, especially with all these trade talks going on. So anyway, that's a key level to watch, and you guys know both levels. We're done with that. Let me put it back to you. We'll cover the NASDAQ and Bitcoin and everything else. And if you guys like our work, please like, subscribe, and ring the bell, click the alerts, and comment. Let us know what you guys think of the show and if we can improve it in some way. That's it. And you guys
Absolutely.
normally do, but tell us more.
Right.
Especially if I didn't hear the first time. All right, let me put it back to you.
Excellent. Excellent
Mhm.
coverage.
All right, thanks. Well, we did talk about the 21,003, what is it, 366 level last week, saying if we can hold above or not. God knows it tried, didn't it? And then but Thursday was the tell when we just
Yes,
couldn't,
you can see we
right?
just got this is the example of, when you get stuck on one side, either above or below, and there was being stuck below, and there you go.
Mhm.
Release the hounds after that.
Yeah.
And the key thing is we came out of this big timing window. Barry did a great job going over those markets and showing you, how things changed over the last week or two and how sort of the patterns evolve. And I think we're seeing the same thing here on the NQs. Bigger picture, right? We made a high, made a lower high, another lower high, potentially, right? That's in
Hmm.
place.
Hmm.
So the key thing for next week, as Barry was talking about, we're stuck under 21,366. As long as we are, we're going to test this 20,600 area. We almost did it at the lows today.
Hmm.
And then if we get stuck under that, it's back to this, 19,900 area.
Hmm.
So, and you can see how, the trip up is much more, you know, capture a level, pull back, capture another level, pull back, capture the level, pull back. On the way down, man, it just kind of slices through.
Right.
And so we got to watch that if this was in fact a really good high and a lower high with here, we could see some pretty slick action in the next week or two here
Hmm.
on the NQs. From a timing standpoint, we did, from this high to this low, we did 34. From the recent low to the recent high, we did 30. So this thing is running in a little bit different rhythm than the S&Ps, but the numbers are good. Here was a 46 high to high. Here we did 110 high to high there to there. So the timing is there. The window was there, and you could see what happened at the window, right? We were going up into it hard. Then the change in trend window came, and we battled it out during that window, and now here's the resolution. So until we take out these highs, we got to consider that that swing is ended, and now we're trying to figure out what kind of move we're going to get in this next swing. We're
Hmm.
going to come down and take out the low, or we're going to come down and make a higher low. We don't know yet, but we're going to watch it. Here we watch it level to level. The first sign was, okay, we lost this level. Now we want to see what happens at 20,642. Do
Right.
the bulls put up a stand here, or do we slice through it and head down to the next level? And we'll see.
Hmm.
Let's look at the weekly. The weekly, again, it's at a critical spot. We've been straddled. We straddled it last week. We straddled it this week. But the close is below this, 21,000 area. So it's close, like it always does. It seems at the end of the weeks we get these closes right on key levels. So weekly basis next week, if we print an entire week below the 21,000, that means the pressure is going to be down to this 18,000 area next. And this is again another lower high weekly basis. All right, let's take a look at the monthly here. So the monthly, we'll get the monthly close next week. Again, just like the weekly, the key number is this 21,000 area.
Hmm.
Right now we're below it. If we close below it, it gives us, again, the potential for the month of June to have a full bar below 21,000, which would point us down towards the full square, the 135, up from the lows in 2002. It would point us down to about 18,200.
Hmm.
And if you've been with us for a while, you kind of see this is how sort of the changes in trend and the price action filters through each time frame. You have to clear a square or clear a half square, then you open up, either the one above or below, depending upon how you clear it, and then and you can sort of start stair stepping down. And as you look through the different time frames, you can see how that begins to occur. Anything else here on the NQs, the daily, or anything you want to comment on?
Well, I think the pattern is around, along all the indices. So now we know what levels to watch. And I mean, it's interesting how they're all at critical levels. When that happens, you have to pay attention because it could be a there could be a fight, right? And then both sides could be taking punches. So you want to take a look want to watch these levels really close. I mean, here you have the 2642, base of the daily, and the 21.3 above. So that would be really important to watch, and especially what happens when they fail, especially the lower number.
Hmm.
So
Hmm.
let's continue to watch. And they don't fail without a fight either. That's what I mean by that, right? We could be volatile these at these events when they're near key levels.
Yeah,
Mhm.
because you're essentially battling for the direction, right? When you're
Exactly.
at these turning points and in these
Hmm.
windows, and the battles are feel. I mean, look at this. The
Yeah.
first thing you noticed was that was quite a battle right there. Well,
Hmm.
that was all in that, the 45, the 90, the Rebel Yell cycle, all in
Everything
here.
hit. Yep. Yep.
And that's how the battles are fought, and then you see the victor based upon price action.
And sometimes one side is weak, so one punch and boom, market can turn on a dime, right? That can happen. Other times it's a struggle, knockdown kind of a fight, and that's when both sides take punches. So I feel like we could be getting into that kind of an environment next week or the week after, both of those. So let's watch it just from cycle perspective.
And here's an example right here where there was a hell of a fight.
Yeah.
I mean, that was a few months, two, three
Hmm.
months of fighting right there.
Exactly.
And then when it resolves, it goes.
You can see
So
even sentiment was pretty evenly divided, right, at that point.
yeah,
So then, yeah.
I mean, this was the S&P 7,000 7,500 crowd
Hmm. Hmm.
pushing it up, and everyone saying, "Oh, it's Armageddon going down," and they fought it out for months, and then they had the excuse to move it.
Yep.
All right, let's go to Bitcoin. Bitcoin made a new all-time high this week. And look at where we're closing, Barry. Imagine that.
Yep.
Now, I didn't post it or say it, but the thing that concerns me is if we get stuck below 108, this can be considered a false break
For sure. Yep.
and potentially a third drive, which you'll
Right.
see on the higher time frame. So this 108 is real short term. This is really key.
Hmm.
If over the weekend or early next week we get stuck below this,
Hmm.
then everybody who bought the breakout, is bag holder. So you got to watch that and see. Overall, as we've talked about, the trend is very bullish. We had this long consolidation here, broke out, pulled back, tested it. Couldn't even come all the way back down, tested it. Now we pushed up to all-time highs.
Hmm.
So it could have quite a battle here, going back and forth across this, and then we still go again. I'm not calling for the end of the rally yet. Just be aware that there is a setup for a potential false break. We could see a real battle here for a while and then go again. As long as we don't take out important support, I don't think there's anything to be super negative about in Bitcoin right now. Let's look at the weekly. Weekly,
That's
you
where
can see
I was going to say that's where the false break could show up.
absolutely,
Mm.
and you can see perfectly here, right? If we take out this week's lows next week, that's not good. That would not be good because then you would have like they're not perfectly symmetrical, but you got one push, two push, three drives, false break, failing at a half square. Then 89.5 really has to hold because then if you start coming down here and taking out this low, then it's starting to look a lot worse. But you're absolutely right. So watch the high and low from this week and see which one gets taken out first to help give you guidance. Let's take a look at the monthly. The monthly's been interesting because we had touched both sides of this half square here.
Mhm.
So early in the month, we came down and tested the low here. Tested the half square here, and now we've come up and pushed all the way to the full square at 54 here, 54 degrees up at this 111 for all-time highs. So the monthly that's a hell of a bar, right? And look, it
Yeah.
likes to do that, Barry. Look at this one.
Hmm.
Did it here, almost did it there, almost did it here.
Strong couple
Um,
of months.
yeah, yeah.
But if
So
you kind of draw a couple of lines, we're just it could be that sort of fourth wave-ish expanding triangle too. Especially
yeah,
if that
yeah.
is a false break, we'll probably come back down and clean out the 74 level.
Which would be crazy, but yes,
I mean, if it's
yeah,
if it's an expanding triangle, that's all.
yeah. Those expanding triangles are tough. Here, you can see it better here, probably. Just do it
Hmm.
like that. to be a big,
Hmm.
big expanding triangle. So we'll see. It's
Yeah.
it all right now is still bullish, right? So this is all just speculating. We have to see what happens
Yeah.
to
Yeah.
price. First thing to do is watch this 108 level. That's a key level. And then based on the price action there, we can assess the odds of one thing happening over another. Anything else to add here on Bitcoin?
No, we're good. We're good.
Okay. All right. So today we're going to check in on the two grains that we've been watching, corn and soybeans. We're going to talk about the cocoa long that we recommended and the coffee short. So these things are no new
Hey, Ben,
recommendations. Yeah.
really quick. Actually, there is something because we're about 45 to 47 bars up from the low. I just
Oh,
noticed.
is that right?
Yeah. So, we could have, that's a hell of a good place to have a false break if we can
Here to
have one.
here. Oh, yeah. 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 Let's see.
It's right there
So
from,
do it calendar day. Yep. There it is.
right? So
Timing is there.
timing is there. So,
Again, it's
and we have yeah, that timing because you're running also a square of 45. So,
right,
we got timing there from low to, low to high as well.
for sure.
All right.
So
Anyway, sorry.
I mean, throw it into the mix, but
Hmm. Hmm.
Bitcoin's not immune to cycles, anybody, in case you're
Yeah.
thinking it is. So
Yeah.
the same cycles and the low to high we were talking about in the S&Ps and the NASDAQ and stocks, this 45 is big and there you got it, low to high. That's a
Hmm.
nice
Hmm.
45 run.
Yeah.
So let's see. Let's see how it
Yep.
plays out.
Hmm.
Let's take a look at corn first. So corn did something a little interesting. Last week we talked about this false break, here at the low, and now we pushed back up above the 451. So what I want to see is this coming week, if we can hold any lows above 451, we might be getting that push we're hoping for, based upon this low coming in, pushing up, and now making higher lows over here. So the key levels to watch next week on the downside is 451. On the upside, I'd like to see us take out like around 495, take out the highs here, and then we can push up here into this full square. Let's take a look at
Hmm.
the weekly. The weekly, we're still kind of grinding here, but this on a weekly basis, you get your first leg up. Here's your second leg. The reason why I keep, sort of bringing corn and soybeans to your attention is bigger time frames. We're going to get this third leg push. I mean, even if we just do an ABCD, Barry, it's going to put us up in here.
Hmm.
But if we actually catch a big third leg, this thing could really run. Let's look at the monthly. The monthly's dancing, 1 week to go, and we're dancing with the full square. Like to see the monthly close above this. Then that gives us a chance to have, June's bar be, a full bar above this where we've been battling here for the last 3, 4 months. So while it's been boring, I want to keep an eye on it and have, bring it to your attention because of the higher low patterns, and the ability here to catch this next big wave. If this is leg one and this is leg two, leg three's coming.
Right.
So that's why we got to keep corn on the radar as long as we're making these higher lows. Anything you want to comment here on corn?
Well, we were talking about long-term bottoms. So all the grains, like we've been talking about, they're all putting them in, and this one looks pretty good so far. It's just following the script. We're making progress upwards. So nice correction. Yeah.
Yeah.
Hmm.
Yeah, I just think it's boring right now, but the exciting part follows the boring in the markets.
Yeah. Boring is when you got to really watch it, which is what we're
That
doing.
that's exactly right. Let's go to
You did
soybeans, which is
mention
a
the false
little,
break, right? On the corn
yeah, yeah,
chart.
the
Yeah. Yeah.
false break on the low
Mhm.
what he just made. Soybeans is a little less boring, and if you take a close look, you can see the pattern that you want to find on these bottoms, right? You have a low, you have a higher low, just marginally, another higher low, marginally, and then you get these, this resistance selling that happens up here at the tops, right?
And marginal higher highs.
Marginal, right? Little poking highs, right?
Hmm.
False break, pull back, false break, pull back, but it's not, it's pulling back to higher lows,
Right.
which is a sign of accumulation. And now we're kind of squeezing a little bit here in this, with this, flat top triangle, which are usually, bullish. They resolve bullishly. So again, another boring one, but it's in this horizontal zone. And when you get these breaks out of these horizontal zones, you get really nice moves. And in this case, it looks like it's not quite a full square, this horizontal break, but it's about three-quarters of a square, which would put us up to 1200 if we get a breakout, right? Because it would be about three-quarters of this square. That would be your target if we break out, get a nice breakout of this horizontal formation. Let's check the weekly. There you got a good view of the horizontal, right?
Yeah, very good.
And look where we're battling at the top here, Barry, right at this
Hmm.
half square, right? That's
Yeah.
1060. So when this thing goes, there's a decent move up here. There's a move, that should put us up in, you know, 1175 to 1200 in this area up here. So there's going to be a nice move when we break. But
Hmm.
notice the change, right? We were coming straight down hard, and now since last August, it's trending sideways with these higher lows, noticeably on the weekly higher lows. Let's take a look at the monthly. There's your monthly. 983 is the key here. We're set to print a full bar above next week, unless we have a pretty substantial down move. And that will be another, sort of sign. The next bar, as long as we're in this area, it gets us out from this downtrend line from the highs that we made in the Russian invasion of Ukraine.
Hmm.
So time is working off here, working off this correction, and it looks ready to go. Just wonder what the match is going to be that lights this thing on fire. We'll see.
Yeah.
Anything catch your eye on this?
Well, everything you said, I think is exactly right.
Right.
Yeah, yeah. It's a gentle, slow motion upward move, which is sort of what happens right before actually the real break comes. So I think
Yeah. With
it's
if
funny, they both
you're
look like they're ready to go.
yeah.
So
I don't know what, like I said, I don't know what's going to be the match that's going to set the tinder on fire, but it's this gentle uptrend within disguised in this box and sideways move.
hmm.
And that's kind of how the market lulls you to sleep as you say, oh, this is going nowhere. I don't need to pay attention. This we need to watch.
Yeah.
Because when it goes, it's going to move quickly. All right, let's go to the next one. Now, why am I bringing your attention to this one? We talked last week about this thing making a potential move to a new high, and this week we had a pretty decent correction. Not happy that we got below this half square, but look where the correction came to, Barry. It came right to the breakout. So on a lower time frame, watch for a reversal. And if we get a reversal here, this could be the test of the breakout, and then we go in earnest.
Right.
I'll show it to you on the bigger time frames, and you'll see. Here's your weekly, right? I put the box in there. We had the big breakout, made a higher high this week, and then pulled back. This 9480, call it, is what I'm calling the breakout area right there, around 9480, 9490.
Hmm.
If we stay above that, and you get a reversal on a lower time frame, watch this. The first level here on a weekly is 10,300. We can clear that, then this thing's on a roll. Here's your monthly. Monthly's crazy, right, on this one. But
Hmm.
I do think it's setting up for that third drive, right? There's your first drive, there's your second drive, and then if we get a high this coming month, that'll be the third drive. And I do think it'll make new highs. There's cocoa.
Hmm.
I know we were talking a little bit about cocoa this week. You got any thoughts you want to share on cocoa?
Well, I think, we talked about the counter trend. It kicked in. So we took out the 50%. we're tapping on that support. So let's see how much of a correction it is
That's right.
from here. I mean, holding about 50% would have been very positive, but now that we're below it, there's definitely room to go. We could definitely go another half or a quarter just to
Hmm.
poke into the depth, in depth of the
Right.
support level.
Poke into the breakout, and that's what I
Yeah.
say. So watch like your 4 hour for a reversal or something
Hmm.
like that,
Hmm.
and that'll give you an early clue, that
Yeah.
this correction's over and it's ready to go. It's funny, that'll give us kind of symmetrical three drives too if we do it, in the next, if we make that high like in July, June or
Hmm.
July, it'll be like right over here, you know.
Yeah. Yeah. Yep. Yep.
So we'll see. All right, last one is the short that we had on coffee. Worked out well. And look at where the low was today. Isn't that an interesting spot?
Yep.
So
Very
here,
interesting.
yeah, here we did this ABCD up, right? That we called out. It was a perfect price and time too. We
Hmm.
kind of
Hmm.
split the little triangle we used there. Gave us the lower high, hard reversal, and then today the low is right on that trend line. And
Yep.
this is a one by one off of here, right?
Right. Right.
So it's at a critical spot. If we lose this trend line, we're going to go down here and test these lows. And most likely, I think, take them out
Right.
because you have series of lower highs here. Then you get your low coming in. You had this retrace ABCD lower high, and then boom, fast move down. So watch the low, today's low. If we take out that low, 335 is next on the full square. And then we have to see how good is this support here and how good is this low that we made here on the 1/8, away from that 335. But it's an interesting development. This thing's acting really nice. It's doing all the right things technically. So let's see. Like, look, even that counter trend berry failed right there at the half square.
Back. Yeah.
So let's check out the weekly. The lows were a pretty important spot for the weekly, weren't they?
Very important. Couldn't be any
So
more.
right. So
Uh-huh.
here, really important, right? We haven't been able to get a close below this 358. So let's watch this coming week. If we do, in fact, start getting prints below here and close next week below 358, then we know we're on our way to test these lows. And whether they hold or not will be another question. But we'll see. The pattern's playing out. Maybe it's going to be some big, A, B, C, D. Let's see where that would take us. There you go.
A little ways to go.
Yeah, round, is that like 310, 312?
Hmm.
Yep, around 312, 313. And here's your monthly. So monthly, the key is we've got a full bar below here. I mean, this is an inside bar, right? We're
Yeah.
inside. So the clue this next month will be, okay, since it's an inside bar, do we take out the high or the low first?
Hmm. It
And
looks
and
closer to the low.
it does look closer to the low. And again, on monthly basis, we may be coming down to test the breakout here, like around 300, 280 in this
Hmm.
area in here. Anything else to add on coffee? I know you love your coffee. Anything to add here?
We're good. We're good. I think you covered
Uh,
everything, all the angles. So,
Yeah. So that's the sort of turn around the commodity world. We talked a little bit about crude and nat gas with Barry, gold, silver, and copper. He covered really well. Cotton is still sideways, so we're waiting, just like we're waiting on some of the other things that have been going sideways, waiting for some more clues that, the sideways is closer to ending. Wheat, it continues to be sideways. It picked up a little bit this week, so it may get billing with the other two grains is looking really positive, but we'll see. We'll see how that plays out. Barry, last week we did a quick review of the fuse, and I think
hmm.
I think there was a good reaction to that.
Hmm.
Let's this week again, why don't you just pick a couple fuse lines you did this week and how we traded them, how we used them, so people can see, how they might be able to use this.
Sure. Yeah, let's do that. If you watched last week's, I think we went a little bit more into it. And if you want to check the end post on X, there's more info on it. And I didn't have time to make nice slides, but this roughly, the vertical lines are the day breaks. This is the Globex market, and you guys can check the time that I post these things. Basically, this was posted right about there. I don't have again. If I go back and forth with time proving that, then it'll take too much time, right? But it's
Right.
all on X. It's their time stamped. Anyway, posted it here. We had a false break to the downside, and then we basically broke the triangle to the upside, and from there all the way to the high. So fuse line was posted here, was 59.17, and straight up. So that's how it worked on Monday. On Tuesday, the fuse line was posted around here, and that was right around the open. And you can see we tried to get up, couldn't do it. You know, if you guys are trading really short term, you could have traded the short side, came back up. You know, we did a triangle. You know, we talked about things are breaking, and this day was really weird because I kept thinking, well, it's got to break to the downside, but it just wouldn't. You know, wouldn't give it up. But then eventually, it started to fade, and you know, one more last push up, and then we sold off. And but it all happened against the fuse line, which was 59.66. And you can see that, you know, if you took the short side, you would have been okay. And there was really no upside because nothing really set up. I mean, we barely got one or two bars up, two, three, 4 bars up. That's it. So that's how we use it. And if you had sell signals in here, those would have worked out.
Yeah,
Now,
and the key thing there was you weren't looking for long trades when we were trading below the fuse.
exactly. That's exactly right.
Hmm.
And then we get on to the 21st. The fuse line was, well, it was the morning fuse line was right there. It was posted right around the opening, right around after the low came in. So that was 59.13 right there. And basically, you know, first impulse was just fine, pull back. Next impulse went straight up. Then the second fuse came very close to the high, 59.51. And that, you know, that set up pretty well, especially if you're going to trade the short term, you know, that little trend line here. And on the downside, here's your signal you're looking for, right? The inside bar, low got
Right.
taken out, and there's a sell. So that worked out really well. So on the 21st, both sides got, you know, we took both sides. And then on the 22nd, 58.58 was the level, and you can see we were basically trading off of it to the long side would have worked out just fine, especially this one. These two would have been a little rough because unless you know take the impulse and get out of the other half, and you know gets into trade management, right? So that's on your
Sure.
you have to handle that part. So and then Friday worked out really well. We got the first fuse came in at 57.74, and that pretty much marked the where the upside began. And we went up all the way to 58.83. That's where we got the fuse for the downside. And you can see we came down, came back up, retested, and failed. So that's general idea of how it works. You know, that's it.
Fantastic.
Hmm.
Well, listen, everybody, we appreciate your support and thanks for helping us grow the channel. And happy Memorial Day to everybody. Enjoy the long weekend, rest up, because as we said, next couple weeks, it's not going to be summer doldrums. It is going to be busy and it's going to be active and it's going to be a great environment for traders. So be thankful for volatility because it's our
Hmm.
friend.
All right. Good job. We'll see you guys next week.